If money is evil, then that building is hell. This is the most obnoxious group of money-hungry, low IQ, high energy, jackrabbit, fucking wannabe, big time, small time, shit talking, bothersome, irritating bunch of motherfuckers I have ever had to endure for more than 5 minutes.
Good morning, good afternoon, or good evening. I couldn't care less what time you're watching this, as long as you are watching it. And thank you, everybody, for your birthday wishes. I will warn you, should any of you ever have the opportunity to meet the ever elusive Elongate, do not go drinking with him. I kind of just stopped drinking maybe about 7, 8, 9 years ago, only because I didn't like it. I didn't enjoy the after effect. So that was all it was. And my dedication to the gym was a hell of a lot more enjoyable for me than having a night out and closing the bar and going home when the sun came up. But yeah, he destroyed me on Friday, and I apologize for any of those drunk texts that I put into the message room as I checked in, telling everybody, go ahead and take the money on our ever-powerful 5740, 5735 SPX Credit Call spread that we used all week last week. So I have you on this screen so that...
Don't fuck it up!
And that is going to continue to be the message. October, very aggressively, expecting a red month. And I'll show you why as we go on. But I'm going to check in here and go through the standard protocol. And that is our spreadsheets. Our spreadsheets help to tell us a lot, which help as we apply it to the charts as to what we've got. 5 gap ups in a row. One was 40 points over there on September 26th. Never a 50-point range. One better than 40-point range. 2 less than 30-point ranges. But at least it wasn't a red close there on Thursday, or else that would have been 3 red closes in a row. Big red flag. She's got a dick. She pees standing up. You definitely got done well not having 3 red closes in a row. So we're going into the final trading session of the month, the final trading session of the quarter, and everybody out there on FinTwit is going to be experts on the JP Morgan collar trade, which expires today on the 30th, which expires every end of the quarter and every large quad OPEX, and you're wasting your fucking time even considering it. I want you to see here on your lows, as we have come into the 5700s, only one dip below 5700. This is an advantage to you for those of you who, again, bring you back here.
Don't fuck it up!
And yes, looking at that, we will be looking tomorrow, after the close tomorrow, or as we get into the close tomorrow, the red October SPX trade for the end of the month of October. I bring you on to the spreads, and I'm going to actually spend an extra minute on the spreads because 5740, 5735, 5740, 5735, 5740, 5735, 5740, 5735. I mean, come on. One thing I'm going to point out is over here on September 11th, where we had the minus 1% move. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We are going into our 13th trading session on Monday, tomorrow, September 30th, without a minus 1% move. Be very, very aware of that And yes, be very aware of that. So again, just sticking here on the spreads, and for those of you, I have absolutely nothing to say about those who are spectacular traders, and you know who you are, and I know who you are. But then the rest of you that are trying to pretend to be spectacular traders, again, the same message continues to come in. I will bring you here, and I'm going here for the month of September. And as you remember, that big drop in the month of September that began, where we had a minus 2.5% start to the month, I failed, expecting that we would get that bounce back to fill that gap at 56.48, 56.48.40, the August 30th close, as we gap down fractionally, expecting that we could get that move back up there and then get into a call trade for the ride down. I failed. It was a $4 credit, $1 risk. So I bring you over to the table that I have created over here. You lost $100 doing one contract. You did one contract, and you traded the trades that we traded, and in blue, the days when had to post a message in the room to take the profit, take your money. One contract. You made $4,600. So multiply that by 2. Multiply that by 3. Multiply that by 5. And that's just trading what we're posting in the room. A lot of you that are fantastic traders, you're making an epically larger amount of money. And it's because you have spent the time and done the due diligence that you needed to understand what works for you, what fits for you, and use me simply as your pit crew. That's about it. And I have nothing wrong with that whatsoever, as long as I can help you get to your destination. But here you go. One contract, one contract, one contract. You're up $4,600 on the month. So solving the problem is a lot more significant than fixing it. So thus, I've made a decision now going into the 28th, 29th year that I've been doing this. And as a quote from The Hunt from Red October, once more, we play our dangerous game, a game of chess against our old adversary. But instead of it being the American Navy, it's the computer algorithms. For 40 years, your fathers before you and your older brothers played this game and played it well. All they had to do was buy the dip. But today, the game is different. We have the advantage. And it's absolutely true. We do have the advantage because you have me. On to the QQQ. Green week, plus 4 points. On to the SPX. Green week. 3 in a row. Back to the QQQ here. Up 4 points on the week. 486.75. 482.95 where the week started. You had your big move, almost filled your gap. We're going to cover that. We're going to go over the ETFs here. But nothing spectacular whatsoever. Nothing spectacular whatsoever. Actually, I think I have to recode this. Yes, I do. Right there. That, when we were up plus 20.61%, as we were above 20% on the year to date, and where we closed plus 19.94% on the year. We're going into October. We're going into October. We're going into October.
Don't fuck it up.
So I bring you on to the IWM. IWM, red week. 2 green weeks in a row, 1 red week. And yes, Mike, daily I will absolutely be providing for you Russell 2000 pivots, because as you want to trade the Russell 2000 and do your credit spreads over there, I have absolutely no problem. IWM, Russell, I've got them both. You have them every morning when you are ready to get trading. So you just let me know. So that's what we got going on here. All right. Nothing that anybody sees. And like I put in the email, nothing spectacular whatsoever. So I will bring you over to the charts, and we will be starting here with SPY. So on SPY, looking here at a 15-day so that we can see the 9/11 ba-boom, ba-bam. We've got this one gap, one gap to be filled, 565, 561. Just something you want to be paying very close attention to with that big 558 down there below. Paying attention to is what I'm suggesting to you with your big major pivot on SPY, 563.15. Now, why is that your major pivot on SPY? Because that is your FOMC candle. The candle right there at 1:59 p.m. prior to the 2 o'clock announcement. And even though, Keith, you saw it very well, you were over there in LA with Mike at SRLA, we closed red on FOMC day. And then we gapped up 1.5% the very next day after that. And we have not even come close to filling that gap. So that gap from FOMC, 565, 561, that's your SPY. That's your short term. That's your narrowed vision SPY. Bring you on to the DIA. And this is where the bananas and the monkeys all meet together. And if you're a gorilla, you are going to have an absolute feast. DIA with the move back up above that 420.72 there on Friday. Dink, and a very, very nice move to the downside as you had. You have one, you have two, you have three unfilled gaps going back to the FOMC day, which sold off after the FOMC meeting. You still have that gap down there below from going back 2 weeks ago, and you are still protecting 400 with the September 11th bottom. That's short term. That's all that it is. Come over onto your IW and your IWM. Again, choppy, sloppy going into the end of the week. Thursday gap, Friday gap, still protecting the big gap. The big gap being down here, 213, 214, 211. This big gap still being protected. You are going into, as I will try and remind you, October.
Don't fuck it up.
So bring you on back, and I believe we are left with QQQ. Yes, we are. We have the QQQ. And QQQ, with it not being the low of this major move on September 11th, because September 11th only came down to 451.35, and your massive ramp up into that 473, 472 area, which has been gorgeous for months and months and months. Your sell-off after the FOMC meeting, right down to that unbreakable 471 in the short term, very short term, 471, and then the kaboom gap up, which is still remains unfilled. And now, well, prior to the middle of last week, you couldn't get through 480. Now, you can't get through 485. So your short term, 485 is your bottom. Your short term, 480 is your bottom. Your short term, 470 is your bottom. So when you're hunting for strikes, not for October, because there's an election coming up in 6 weeks, those are the strikes that you're looking for. 485, 480, 470. And as we start to get a move to the downside, we can then start glorifying the 450s and therefore everything below. Elongate and I had a very good conversation about what's going on. I'll try not to elaborate because I don't want to mislead anybody on what two traders who have known each other for 23 years, ran a hedge fund together, play practical jokes that are better than any of them in the world. And fuck you, Elongate. I knew she was a dude. I knew she was a dude before she even got in the car. So you didn't get me on that one.
I got 3 tickets to that concert. Hey, how about Boy George? What about the police?
Oh, hi.
Oh, no! Not her! No! No! Anything but that! No, not her! Not her! She pees standing up! Not her! What do you mean?
This is where we're at. So I will move over because we really don't want to waste anybody's time because football is on. It's all about football season now. the SPX, and I'm looking at the 15-day 5-minute chart so that you can see the ba-boom September 11th bottom and the massive move back up above the 50-day moving average, back up above that 55.63, and then this tiny little gap that we never could ever get anything to back better than a week ago after OPEX. Or was this OPEX week? Yeah, this was OPEX week. Couldn't get that 5,600, 55.95. Couldn't get it done. Your FOMC meeting and your FOMC meeting candle being 56.37, which is a little bit more than 2% from the all-time highs. God forbid. With your big, massive gap being this 56.18 to 56.75. What we're playing with right now and what you guys have been enjoying over the last couple of days is having your 5-day moving average be your support. Come down to your 5-day moving average, bink, support, and you get bounced off it. Come down to it again there as you did on Friday, bink, bounced right up off of it. So that's the game that you're playing right now, is with your 5-day moving average. Don't really give a shit about what happens tomorrow on September 30th. Don't really care. But looking at this going into October, that 5-day moving average and using a lower strike for your credit spread for the Don't
fuck it up.
Yes, and a reminder, that is what we will be looking for from a short-term point of view to be safe. To be a little bit more aggressive, just go down to 56.37, and you'll see me posting that at the end of the day tomorrow. So, wrong direction, going in this direction again here, looking at the SPX and tracking this from months now. Coming off of that big May bottom, that August bottom, the 51.1926. I'm looking at this as a 1-2, this is your 3, this is your 4, and here we are into wave 5. And wave 5 has taken a bit of a stretch. Your 1-2 R3 with a very shallow 4, extremely shallow 4 that took place over there back on September 17th, right after the FOMC meeting. And from that, we have been into what looks like a very clean 1, 2, 3, 4, looking to project a 5. A 5, 57.48 should have worked, should work. We should never have gone above 56.49, 56.38. That's the trap level. I can't sell that to anybody because everybody wants to narrow in and day trade. But yes, 56.38, 56.49, that should be where our top is. Thus, everything that is happening up above this, I see it as nothing more than fluff. And that fluff can be day traded. That day trading, as you see, as we've been moving up, not being a perma bear or any kind of, gay bathroom bear, whatever you want to call it, rainbow warrior. It's easier to sell calls than it is to play the bullish puts, because your bullish puts are going to get you fucking crushed. So I move you over into this chart, and again, looking at this from a big point wide view, 1, 2, 3, 4, 5, and then our move down into 2022, and the move off of 2022, which, as you remember, ABC. Looking here at a 1, 2, 3, 4, and looking to stretch for a 5. And this is where you're seeing people posting 59.30, 5900. Some people are posting 6,000, 59.50. It's clear to see, but it's there to be failed. And more importantly, being failed, I will switch charts to the one I know is detailed. Oh, that is not going to be the one that's detailed. I need to find the one. There it is. Green and red weeks. 3. You've just had your 3rd green week in a row. We had 4 coming off of that big oversold low down there in August. We had 6 going into it. 4 prior to that. 3, 5, 9, 9. That 9 really fucking sucked back at the end of last year. 355, but the point being is we have 3. So we have pretty much eaten as much as we should be eating. We have had 3 green weeks in a row. Getting a red week this week is very plausible. It's very possible. However, we will allow the data to provide us with that info, because rather than just looking at it from a weekly point of view, we are looking at this from a
Don't fuck it up.
Big, wide point of view. Coming back onto the SPX. And again, leaving off of here And coming into how I want to support my view as to why I am looking for that.
Don't fuck it up.
Exactly. This, I'm here on a monthly time frame, looking at this from a monthly, and as I will do what I can to zoom out, and as you can see here with your bullish RSI on the monthly, I have nothing to comment about that. September, we're closing green. That's what it looks like right now. 1, 2, 3, 4, 5. 5 green months in a row. 1, 2, 3, 4, 5. 5 green months in a row coming off of when Israel invaded Gaza. 1, 2, 3, 4, 5 green months in a row. 5 green months in a row coming off of that March 2023 low. 1, 2, 3, 4, 5, 6, 7. Different game here. Much different game back in 2021. Much different game. 1, 2, 3, 4, 5 green months in a row coming off of that COVID bottom. So again, this is where my aggressiveness is going to be coming from going into the month of October, that I will be looking at an October 30th, 31, whatever the expiration date is, for the end of the month, looking for it to be closing red below where we opened the beginning of the month, which will be dependent upon where we close at the end of today, and being that, again, we are reminding this, the hunt for red October.
Don't fuck it up.
Looking here where we're at, and we are opened up at 57.2490, down 13 points from where we closed on Friday. That's what we're sitting with right now. We should be able to rally at least 100 to 110 points to the upside today, because they apparently wiped out the leader of Hezbollah, and that solves all of the world's problems. But you're going into the month of October. So once again, moving into the month of October, believe what you want to believe. If you don't know how to piss in the toilet without splashing it all over the seat, don't try and make your own decisions. I don't see a fucking reason why it becomes complicated. That when you put out a trade, you take the trade, you take the profit. How can you continue to struggle when there's other guys that are making $50,000 a week, $50,000 a day, and you can't make $50? You got to make your decision that you just can't do this. You're just going to be a regular schmo. You're never going to get anywhere in life, and just quit.